So what we're looking at, when we see the numbers on COMEX, you can see there's a pretty naked short position amongst the swaps, which are basically the bullion banks. So I think that this rise in the gold price and also the silver price is putting an enormous pressure on the banking system.
Thanks for tuning into Silver News Daily. Subscribe for daily news content and price speculations. As we embark on this exploration, it's crucial to start with the context provided by financial analyst Aslidair Macleod, who has been closely following and predicting trends in precious metals. Macleod suggests that by April 2024, the price of silver could skyrocket to an unprecedented $2,333 per ounce. This dramatic increase, according to Macleod, will be primarily fueled by several factors, including massive bank accumulations of gold, significant purchases of gold and silver by China, and a general global rush towards these metals as stores of value. To understand why Macleod forecasts such a significant increase, let's delve into the current dynamics of the silver market and broader economic indicators. Current silver prices. As of the latest day, that silver has been trading at about $29 per ounce. This is an important baseline as it shows the potential room for growth if Macleod's prediction holds true. Bank accumulations of gold. Banks around the world, especially in Western countries, have been quietly amassing large quantities of gold. This accumulation is not just a hedge against inflation, but is also a strategic move anticipating shifts in global financial power structures. China's role. China is not only buying gold, but also significantly increasing its silver reserves. Macleod points out that China's aggressive acquisition of these metals is strategic, aiming to fortify its economic sovereignty and possibly challenge the US dollar's dominance. Economic indicators, interest rates, inflation, and geopolitical tensions, especially in regions like the Middle East, have historically impacted precious metal prices. The current global instability, including conflicts and economic uncertainties, is prompting investors to seek refuge in silver and gold. Silver as wealth, not just wealth storage. Macleod emphasizes that silver, historically used as currency, will regain its status not just as a mere investment, but as real wealth. This perspective is critical as it underscores a return to precious metals in the event of major fiat currency devaluations. In sum, Macleod's view is that these factors, combined with ongoing global financial uncertainties, are setting the stage for a monumental rise in silver prices. This initial step sets the groundwork for understanding the potential triggers and the broader implications of such a rise in silver prices as predicted. As we proceed, each subsequent step will build on these fundamentals, exploring specific events and data that could drive silver to the heights forecasted
as far
by
as the
Macleod.
dollar is concerned, and that is why gold and silver appear to be rising. As to the very short term, they've shot up very, very rapidly. It rather suggests to me that there could well be bullion banks in trouble because they take the short position. Not only do they take the short position in the market on COMEX, and COMEX incidentally has grown as a proportion of the total world futures market or paper markets, because the OTC market in London, I was surprised to see in a presentation by Ruth Crowell, who's the head of the LBMA, that COMEX has probably caught up. It's probably as much as, I don't know, something like 60% of the LBMA's size, whereas in the past, the LBMA was 10 times the size. So this is interesting. So what we're looking at, when we see the numbers on COMEX, you can see there's a pretty naked short position amongst the swaps, which are basically the bullion banks. Not only that, but in Europe in particular, banks offer unallocated gold accounts, and these are fractionally reserved. So that again is technically a short position in the bullion market. So I think that this rise in the gold price and also the silver price is putting an enormous pressure on the banking system. For this reason, I think there was a coordinated knockdown on Friday when, after all, the buyers, or the supposed buyers in the Far East, had shut up shop for the night. That was the time when you come in and you bang the market and you take out the stops and you get the price down. And that indeed happened really very, very dramatically. Whether it continues or not, we will see. I think that a decent correction is overdue, But these are strange times. So we have to see. I mean, all I can say is that trading this is extremely difficult. But from the point of view of what you might call stackers, the people who I would rather describe as trying to escape credit because they understand the problems that credit faces, they're better just sort of stay with it and use any dip to, get out of credit and get into gold. And that, after all, is what the People's Bank of China is doing. It is selling US treasuries to buy this stuff. And they know what they're doing.
Moving further into the intricacies of the silver market, Aslidair Macleod has often highlighted the significant role that banks and financial institutions play in the dynamics of precious metals. Understanding this is key to grasping why he predicts such a dramatic rise in the price of silver. Banks, traditionally seen as stabilizers in the financial world, have actually been at the forefront of influencing silver prices through their trading activities and strategic reserves. Banks and large financial institutions engage in the trading of silver futures and options, which are contracts to buy or sell the metal at a future date at a price that is agreed upon today. These instruments are used by banks to hedge against price fluctuations in their physical holdings of silver and to profit from changes in silver prices. The leverage provided by futures contracts means that even small movements in the price of silver can lead to significant gains or losses, thereby adding a speculative element to the market that can exacerbate price volatility. Moreover, banks are known to hold substantial amounts of physical silver in their vaults. This practice is not only for the purpose of investment, but also as a means of controlling the supply and, by extension, the price of silver in the market. By strategically releasing or withholding silver from their reserves, banks can influence market perceptions and price movements. For example, during times of high market demand or economic uncertainty, banks might choose to release smaller quantities of silver, thereby driving up prices due to the heightened scarcity. Macleod points out that this manipulation of silver supplies can create artificial scarcity, leading to price spikes. This practice is particularly impactful when combined with significant buying by major economic players such as China, which adds further pressure on the limited supplies and pushes prices even higher. Another critical aspect to consider is the accumulation of gold by these banks. While it might seem slightly tangential to the price of silver, the accumulation of gold is often mirrored by similar behaviors in silver. Banks accumulate gold as a reserve asset to bolster their balance sheets and to provide a hedge against fiat currency devaluation. The rationale is that in times of significant economic downturn, precious metals like gold and silver retain value far better than paper currencies. Therefore, if banks are accumulating gold in anticipation of economic instability, they are likely also interested in bolstering their silver reserves for the same reasons. The relationship between gold and silver prices is historically interconnected. Often, movements in gold markets will lead to similar movements in silver markets. This phenomenon, known as the gold-silver ratio, is closely watched by investors and analysts. If gold prices are rising due to bank accumulations, it is reasonable to expect that silver will follow a similar trajectory, especially considering their shared status as safe haven assets during periods of economic uncertainty. In this context, Macleod's assertion that the price of silver could escalate to $2,333 becomes more plausible. The manipulation of supply by banks, combined with strategic acquisitions by countries like China, sets a foundation for a potential surge in prices. The banking sector's influence extends beyond mere trading, impacting the fundamental dynamics of supply and demand in the silver market. This understanding is crucial as we continue to explore the other factors contributing to the expected rise in silver prices, particularly the geopolitical tensions and economic policies that play into the hands of those holding large reserves of precious metals.
The way in which they justify it is they say, well, you've got GDP is growing, the employment figures are strong and all the rest of it. We know that the GDP numbers are actually inflated by government spending, so that's unproductive. That is inflationary. So they're right for the wrong reason, if you see what I mean in that respect. And when it comes to unemployment numbers, I mean, they as estimates, they are so inaccurate as to be risible. They really are. So I won't comment about those. But you can see that from Powell's position, he has got to follow a responsible course. He does not want to go down in history, or I assume he won't want to go down in history as the modern Havenstein, the guy who was running the German central bank back in 1922, 1923, Rudolf Havenstein. Yeah, so he doesn't want to leave a legacy, if you like, of destroying the dollar. So, which I think is entirely reasonable. And the idea that he's going to kowtow to Janet Yellen, or indeed Donald Trump if he gets elected president, is a complete nonsense. It really is. I think that, and this is interesting, I don't actually think that under these circumstances you could say that Powell has got any control over the interest rate outlook at all. He can't manage it. He is trapped. He cannot reduce rates, as I'm sure the political class would want. I mean, we've seen Janet Yellen going over to China. This is a second visit in a year. Treasury officials have been going over there. Guess what? They've gone to see the bank manager. That's actually what they're doing. So, the idea that we should be watching the Fed is a minor part of the story. Actually, it's China that's setting the agenda for interest rates as one of the two major holders of US treasuries. The other one is Japan, and we've just seen the support operation which the Bank of Japan has been mounting for the yen has just failed. I mean, they drew a line at 152. It's now nearly 155. So that the Bank of Japan is not in the business of buying treasuries. It's in the business of selling them to support its own currency. And as far as China is concerned, it's going to take an awful lot of persuasion for the Chinese to buy more dollars when they recognize the debt trap that the U.S. government.
As we delve deeper into the potential catalysts for the surge in silver prices predicted by Aslidair Macleod, it's essential to explore China's role in the precious metals market, particularly their strategy regarding silver and gold acquisitions. China's approach to building its silver and gold reserves is not merely a matter of economic policy, but also a strategic move to bolster its financial security and global economic standing. China, as one of the world's largest economies, has been diversifying its reserves away from the US dollar. This strategy is evident from its substantial purchases of gold, but it is equally aggressive in its acquisition of silver. Macleod points out that these acquisitions are partly defensive, aimed at insulating the country from dollar fluctuations and the vulnerabilities of being tied too closely to U.S. monetary policy, but they also reflect a broader strategic aim to influence global commodity markets. The Chinese government and its state-controlled entities have been known to buy large amounts of silver, both for industrial use and as an investment. Silver plays a dual role in China's economy. It is not only a precious metal that serves as a store of value, but also a critical industrial metal used in various high-tech applications, including solar panels, electronics, and medical instruments. The demand for silver in these sectors is substantial, which adds an additional layer of complexity to the market dynamics. By increasing its silver reserves, China is doing more than just safeguarding its economic future. It is also positioning itself as a major player in the global silver market. This strategic positioning allows China to exert a significant influence on silver prices. For example, by controlling a large portion of the world's silver supply, China can impact prices through its decisions to either hoard or release silver into the market. Furthermore, China's buying spree is often viewed as a signal by other market participants. When China buys, it often triggers a rush among investors and other nations to also secure silver and gold, exacerbating the demand-supply imbalance and pushing prices upward. This phenomenon is well understood by market analysts and is closely monitored as an indicator of future market movements. Macleod emphasizes that the aggressive acquisition of silver by China should be seen as a bellwether for the precious metals market. It's not just about the quantities being bought, but also the implications of these purchases. As China buys up significant amounts of silver, it decreases the available supply in the market, which can lead to higher prices, especially if other factors like geopolitical tensions or economic uncertainties are at play. In this context, the projection of silver reaching $2,333 per ounce is tied not only to market dynamics and banking activities, but significantly influenced by China's strategic maneuvers. As we consider this scenario, it's important to recognize the broader geopolitical and economic landscape in which these moves are made. China's actions in the silver market are a microcosm of its larger ambitions on the global stage, which includes establishing a more dominant role in international financial markets and reducing dependency on Western economic systems. Understanding China's role provides a clearer picture of the potential triggers for the dramatic increase in silver prices forecasted by Macleod. As we progress to the next steps, we will connect these triggers with specific events and economic policies that could further catalyze the rush for silver.
This has implications for the dollar. So we're now moving on towards gold, if you like. I think that, if you put yourself again in the shoes of Putin and also President Xi, you look at this situation, you look at the dollar, you can see that the dollar is declining in its influence. A lot of this is due to actions actually by the Biden administration. It's declining in its influence. And not only that, but both the hegemons can see that the debt situation in America is all but terminal for America, all but terminal for the dollar. What they don't want to be is accused of undermining the dollar unnecessarily. Their policy has been just to sit back and let the dollar destroy itself. This is now happening at an increasing pace. And this is why gold and silver have been rising. It's not that they have been rising, and as we've discussed before, it's actually the dollar declining. I think what we're seeing is an increase in the pace of decline of the dollar. It is clear also that the rate of inflation in America is not falling. It is clear that with the US government in a debt trap, that bond yields will rise. It's also clear that rising bond yields, rising interest rates, the attempt of banks to avoid risk means that the private sector is going to be deprived of very expensive credit. And when I say deprived of expensive credit, I don't mean they're going to be offered cheap credit. Far from it. The situation for over-leveraged businesses, I mean, we've seen this with the commercial real estate sector. Same with private equity, which works on leverage. There is going to be an absolute catastrophe in the private sector. And the banks, the commercial banks, want to avoid this. And I was interested to note that Jamie Dimon came out with a statement, I think it was last week, of sort of the prospects, and he was pretty much echoing what I've been saying, but perhaps slightly more politely. So you've got the same message right from the top as the one I'm giving you now.
In this exploration of factors driving potential silver price increases, as outlined by Aslidair Macleod, it's crucial to address the role of geopolitical tensions. These tensions often create uncertainty in global markets, prompting investors to turn towards safe haven assets like silver and gold. The current geopolitical landscape is marked by several flashpoints that could significantly influence the precious metals market. One of the critical regions affecting market sentiment is the Middle East. Recent escalations between major powers in this region have led to increased market volatility. The conflict dynamics, particularly involving countries like Iran and Israel, are complex and can lead to sudden shifts in global risk perceptions. For instance, any significant military action in this region could disrupt global oil supplies, leading to economic uncertainties that traditionally boost investments in silver and gold as protective measures. Additionally, the ongoing tensions between Western countries and Russia, especially regarding the situation in Ukraine, add another layer of complexity. These conflicts not only affect the countries directly involved, but also have ripple effects across global financial and commodity markets. The uncertainty and the potential threat of broader conflicts or sanctions can cause fluctuations in currency values and lead to increased investments in silver as a more stable store of value. Macleod has pointed out that such geopolitical scenarios often lead to a rush to safety among investors. The logic is straightforward. In times of uncertainty, the relative safety of silver becomes highly attractive. The demand for silver increases not just for its potential to appreciate in value, but also as a hedge against potential losses in other market segments. Moreover, these geopolitical tensions can affect silver supply chains. Many silver mines are located in politically unstable regions. Any disruption in mining operations due to political unrest or economic sanctions can decrease the silver supply, thereby pushing prices up due to scarcity. The interplay between these geopolitical factors and silver prices is a key area of focus for Macleod. He argues that as tensions rise, so too does the likelihood of a significant price surge in silver. This is because, in addition to the direct impacts on supply and demand, Geopolitical uncertainties often lead to policy shifts in major economies. For example, central banks may alter interest rates or engage in quantitative easing in response to heightened risks, which can devalue currencies and further drive investors towards silver. Furthermore, Macleod highlights that the strategic responses of nations like China to these tensions, such as increasing their silver and gold reserves, can amplify the impact on silver prices. When major economies react to geopolitical instability by shoring up their precious metals reserves, it sends a strong signal to markets, reinforcing the trend towards higher silver prices. In conclusion, understanding the influence of geopolitical tensions on the silver market provides crucial insights into why Macleod believes silver could reach such extraordinary prices in the near future. The next step in our exploration will delve into specific economic policies and market dynamics that could trigger or accelerate this surge in silver prices, further solidifying the foundation for Macleod's prediction.
Historic role as an alternative money to gold, which I think will drive the price considerably higher. And I note today, this is Monday the 15th, that looking at gold, it is up about less than 0.2%, and at the same time, silver is up 2.36%. Excuse me. So, this indicates a very tight market, and I would see that continuing. So even if the recent rises, which have been spectacular, as far as people who don't understand its credit going down, as far as the people who don't understand that that's the case, this rise has been spectacular. I think silver will probably tend to hold up better than gold because of these underlying industrial dynamics, with the acceleration of demand from India, which has now become a major importer of silver, not because Indians are so much buying silver as ornaments and all the rest of it, or as a cheap alternative to gold, but I think it's that industrial demand which has really been driving it. And that's
exploring the potential surge in silver prices to $2,333 as predicted by Aslidair Macleod requires an examination of the relevant economic policies and market dynamics. Macleod often emphasizes that the interplay between macroeconomic policies, particularly those related to monetary interventions by central banks and fiscal stimuli by governments, significantly influences precious metals markets, including silver. Central banks around the world, notably the Federal Reserve in the United States, play a pivotal role in shaping the economic landscape through their monetary policies. Interest rates, quantitative easing programs, and other monetary tools are used to manage economic growth and inflation. However, these policies can have profound effects on the valuation of silver. For instance, lower interest rates generally decrease the opportunity cost of holding non-yielding assets like silver. When rates are low, the returns on interest-bearing investments also diminish, making silver a more attractive investment. Conversely, high interest rates can lead to a stronger currency, making silver priced in that currency more expensive for foreign investors, potentially dampening demand. However, Macleod points out a critical aspect of current monetary policies: the persistence of low interest rates amidst high inflation. This environment can lead to negative real interest rates, where the inflation rate surpasses the nominal interest rate. Such conditions are historically favorable for silver, because the metal is often seen as a hedge against inflation. As consumers and investors look to protect their wealth from diminishing purchasing power, they turn to silver and other precious metals. On the fiscal side, significant government spending, especially in response to crises like the COVID-19 pandemic, can lead to higher national debts and potential inflationary pressures. Governments have ramped up their expenditure to sustain economic activity, financed either through higher borrowing or by printing more money. This increase in the money supply without a corresponding growth in economic output can devalue the currency, again making silver an attractive store of value. Macleod also discusses the role of safe haven demand in response to economic policies. In times of economic uncertainty, or when monetary policies are viewed as unsustainable, investors often seek safe haven assets like silver. This demand is not merely a reaction to the policies themselves, but to their broader economic implications, including potential crises in debt markets or currency devaluations. Moreover, the speculative dynamics in the silver market itself can also drive prices. Speculators in futures markets can exert significant upward pressure on silver prices, particularly if they anticipate future economic disruptions or policy shifts that may favor higher silver prices. These speculative movements are often based on the interpretations of economic indicators and policy announcements, and they can cause rapid price changes even before the real economy reacts. Furthermore, Macleod highlights that international trade policies and tariffs can impact silver prices. For example, tariffs on silver imports or exports can restrict supply chains, altering the availability of silver on global markets and thus influencing its price. Trade wars, such as those witnessed between the United States and China in recent years, can also affect investor sentiment and drive more capital into safe haven assets like silver. In summary, the economic policies and market dynamics discussed by Macleod are crucial in understanding why he predicts such a dramatic increase in the price of silver. These policies not only affect the direct investment appeal of silver, but also shape the broader economic context in which silver is traded. As we move to the next steps, we will explore more granular triggers and events that could catalyze the rush for silver, further supporting Macleod's forecast.
I cannot see any way out of this. And of course, nor can the US government. I mean, the US Treasury is relying entirely on its financing on the T-bill market. There were two auctions last week. There was a 10-year on Wednesday, which was not good, and there was a long bond auction, I think, on Friday, and that wasn't brilliant either. I mean, there's no doubt about it. I mean, the 10-year was pretty awful, actually. The 30-year was better, but still not good. You've got natural buyers in the pension funds for the 30-year, so I mean that should have gone. But nobody else is interested in it. Nobody actually wants to lend the US government money. The only thing the US government can do is to issue T-bills. And those T-bills are costing it 5.3, 5.4%. There's one bit of funny money accounting that will come out of this. Of course, T-bills are bought, you buy them from the issuer at a discount to their face value. And the discount would reflect, if you like, a rate of interest. But the result is that as far as the interest element, if you like, of the budget deficit is concerned, that is going to diminish because it will, realize itself, if you like, in losses on the bond side or on the bill side. So. We're entering a rather bizarre period, but one way or the other, there is absolutely no way that the US government can escape its debt trap. That is getting really very serious and impossible to get out of. And the Russians and the Chinese know this. And sooner or later, they're going to have to protect their own currencies by going on to a gold standard. That, in my view, will happen. And I think it will happen basically because it will be pushed as a defensive move, if you like, certainly from Russia and certainly from China. I would also expect the Saudis to follow, and there could well be other nations to do so as well. And the ones that don't will seek to align themselves with currencies which are on a gold standard. So I think this, the fiat, post-Bretton Woods fiat experience, I think, is actually coming to an end. It's very, very mature, very long in the tooth, and we're very...
In the examination of factors that could drive silver prices to the unprecedented level of $2,333 per ounce, as forecasted by Aslidair Macleod, it's crucial to delve into the role of inflation. Inflation fundamentally alters the landscape of investment by decreasing the purchasing power of money, prompting investors to seek assets that can serve as hedges against this erosion. Silver, alongside gold, has historically been viewed as an effective hedge against inflation. Inflation affects silver prices through several mechanisms. Firstly, as the general price levels in an economy increase, the nominal prices of commodities, including silver, tend to rise correspondingly. This is because the costs of mining and production also increase, which in turn raises the base price of silver. Additionally, as the value of currency diminishes under inflationary pressures, tangible assets like silver become more attractive to investors looking to preserve value. Macleod has pointed out that the current global economic environment is ripe for sustained inflation. Several factors contribute to this scenario. Central banks around the world have implemented expansive monetary policies, including significant quantitative easing measures, in response to economic slowdowns triggered by events like the COVID-19 pandemic. These actions have flooded markets with liquidity, significantly increasing the money supply without a commensurate increase in economic output, thereby setting the stage for inflation. Moreover, supply chain disruptions have led to increased costs for goods and services, further fueling inflationary pressures. These disruptions, exacerbated by geopolitical tensions and policy responses to global health crises, have affected the availability and cost of raw materials and finished goods, influencing the prices of commodities, including silver. In environments where inflation is high, the nominal prices of assets like silver are pushed up as investors shift their portfolios away from cash and cash-equivalent assets, which lose value in real terms due to inflation, towards more stable stores of value. This shift increases demand for silver, thereby driving up its price. Macleod suggests that this dynamic is likely to become more pronounced as inflationary pressures continue unabated across major economies. Furthermore, the psychological impact of inflation on investor behavior cannot be understated. Fear of losing purchasing power tends to drive a self-reinforcing cycle of increased demand for silver. As more investors flock to silver, the perception of its value as a hedge grows stronger, attracting even more investors in a feedback loop that can lead to rapid price increases. Another angle that Macleod emphasizes is the impact of inflation on debt levels. High inflation can erode the real value of debt, which might sound beneficial for debtors, including governments with substantial sovereign debt. However, this situation also creates uncertainty about future economic stability, prompting further shifts towards silver and other precious metals. The anticipation of these trends has led Macleod to assert that the combination of high inflation, expansive monetary policies, and ongoing supply chain issues will significantly impact silver prices. This backdrop makes his prediction of silver reaching over $2,000 per ounce more understandable within the current economic framework. In the next step, we will explore specific market triggers and events that could act as catalysts for the rush towards silver, further embedding Macleod's prediction within a broader economic and geopolitical context.
Silver, the price has been controlled, I think, by China, because the People's Bank of China has really had, back in 1983, it's given a dual mandate on gold and also silver. With respect to silver, China uses it not as money, but it uses it as an industrial metal. China is the major manufacturer of photovoltaic cells. It's stepped up its production of lithium batteries, and generally the consumption of silver has been rocketing. India came into this as well recently. The Indian government wanted to generate or support the photovoltaic cell business. I think this is partly, if you like, to offset the increasing amounts of carbon that the nation is generating. So the result is that some very large businesses in India have been building factories to produce these photovoltaic cells. And one in particular, Reliance Industries, was in the market, and I believe that was the company which was taking delivery on COMEX. With something like, 1,300 tons has gone out of COMEX since January the 1st. And Reliance Industries, phase one of its production was due to start in March. I haven't actually heard whether it has, but I assume it has. And that is that's a 5 gigawatt photovoltaic manufacturing facility. They're looking to doing 20 gigawatts. Now, this is a very serious demand element for silver, which takes the control of the price away from China. And that's a very important point. And as well as that, of course, we do know that when gold runs, silver tends to run twice as fast. If gold goes sideways, you've got the risk that the gold-silver ratio starts rising because, monetary interest disappears from silver. But the monetary interest is still sort of there in an underlying form, if you like. And I think what we're likely to see is that as gold goes up, and we've now seen that it's broken out of sort of recent lethargy into really new high ground, which basically means the dollar is declining, then we're seeing this also being reflected in other metals, including silver.
Exploring the potential surge in silver prices to $2,333 as forecasted by Aslidair Macleod, it's important to identify specific market triggers and events that could act as catalysts for this dramatic increase. These triggers not only encompass the broad economic and geopolitical issues discussed earlier, but also include more immediate and tangible events that could rapidly influence investor sentiment and market dynamics. One of the primary triggers is the possible default or near default on sovereign debt in major economies. As global debt levels reach unsustainable levels, particularly in light of the economic strain caused by the pandemic and subsequent recovery efforts, the risk of default or restructuring becomes more pronounced. Such an event would shake confidence in traditional financial systems and fiat currencies, prompting a significant shift towards precious metals like silver, which are viewed as more secure investments during times of financial instability. Another potential trigger could be a major financial institution or a series of institutions facing insolvency due to exposure to risky assets, derivatives, or bad loans. The collapse or significant financial distress of a major bank or financial institution, similar to the Lehman Brothers incident in 2008, could lead to a crisis of confidence in the banking sector. This scenario would likely result in a rush towards silver and other tangible assets as investors seek to protect their wealth from the perceived risks in the financial system. Macleod also highlights the role of technological advancements and their impact on the silver market. The increasing use of silver in various industrial applications, especially in areas like photovoltaics, solar panels, electronics, and medical technologies, could lead to a surge in demand that outstrips supply. A significant breakthrough in technology that relies heavily on silver could suddenly increase demand for the metal, pushing prices higher. Climate change and the global response to it could also serve as a market trigger. As the world increasingly turns to renewable energy sources to combat climate change, the demand for silver, a critical component in solar panel production, is expected to rise. Any international agreements or national policies that accelerate the transition to renewable energy could increase the demand for silver significantly, affecting its price. Moreover, regulatory changes or trade policies that affect the production, export, or import of silver could also trigger price movements. For example, new tariffs on silver imports or exports, changes in mining regulations or ships and policies regarding the stockpiling of strategic resources could all influence silver prices. Lastly, Macleod points out that changes in the investment strategies of large institutional investors or sovereign wealth funds could also act as catalysts. If major funds decide to increase their allocations to silver as part of a strategic shift towards real assets, this could lead to significant upward pressure on silver prices.
Which I think is rapidly
Such shifts might be driven by a reassessment of risk in the context of ongoing inflation concerns,
to what
currency
end,
devaluation, and geopolitical uncertainties. Understanding these specific triggers helps in grasping the potential rapid changes in the silver market.
Inflation is not over. I mean, in the monetary sense, you can see that with the budget deficit still running at
individually or
this current year, I would expect it to be over 3 trillion.
Investor behavior and market
that
dynamics,
is still pushing
contributing to a sharp rise in silver prices.
Debasement into the dollar.
As we move to the next step,
so
we will consider the ongoing
important.
role of media and market sentiment in shaping the trajectory of the silver market.
There was another thing which was interesting because I was speaking to a friend in the IMF,
investor psychology play into Macleod's predictions.
She was pointing out that Larry Summers seems to have this knack of front-running changes in policy by pointing out something. And I think it was last month, Larry Summers was a sort of joint author in a paper which was put out by Harvard and also the IMF on a joint basis, which looked at inflation, including the cost of finance. So we're going back to the way in which the CPI was calculated back in the 1980s. And this is a point which John Williams has been making with his calculations. But he reckoned, Summers reckoned on this paper, that inflation in 2022 was actually up at 18%. Of course, interest rates have not declined. They're still there. So the interest rate element, if you like, of the CPI, if it was still included in the CPI calculation, would mean that inflation is running at a considerably higher level than the current level. So again, this is sort of supports what John Williams has been saying. But the point that my friend in the IMF was making is that, for Larry Summers to come out with this rather suggests that in the background, you can see that the officials at the Fed are concerned about the inflation situation and cannot get interest rates down and will not get interest rates down.
Continuing the exploration of factors that could propel silver prices to Aslidair Macleod's predicted level of $2,333 per ounce, it's crucial to understand the role of media influence and market sentiment. The way information is disseminated and perceived by the public and investors can significantly impact financial markets, especially in the context of precious metals like silver, where investor sentiment plays a critical role. Media coverage of financial markets, geopolitical events, economic policies, and corporate news can lead to rapid changes in investor behavior. For instance, bullish reports on silver, highlighting factors such as increased industrial demand, inflation concerns, or geopolitical tensions, can lead investors to increase their holdings in silver, driving up its price. Conversely, bearish news can prompt selling, leading to price declines. Macleod emphasizes the importance of narratives in the financial markets. These narratives, often shaped by media outlets and influential market analysts, can create self-fulfilling prophecies. For example, widespread reporting on expected increases in silver prices due to inflationary pressures can lead more investors to buy silver in anticipation, which in turn drives up the price, confirming the original narrative. Furthermore, the role of social media and digital platforms in shaping market sentiment has grown exponentially. Information spreads faster than ever before, and its impact is amplified by the global nature of digital communication. Viral news and trends can lead to rapid and volatile market reactions. In the case of silver, a surge in interest from retail investors, potentially coordinated through platforms like Reddit or Twitter, could lead to short-term price spikes as seen in other commodities and securities. Another aspect to consider is the psychological impact of market milestones. When silver prices hit certain key levels, such as breaking past $30 per ounce, it can generate significant media coverage and investor interest, potentially leading to momentum-driven price movements. These psychological thresholds, when crossed, often result in increased trading activity and can attract new investors who wish to ride the upward trend. Macleod also points to the importance of investor sentiment indicators, such as the gold-to-silver ratio, which investors use to gauge market conditions for precious metals. Significant deviations from historical norms can be interpreted as buy or sell signals, influencing silver market dynamics. Media coverage of these indicators can amplify their impact, leading more investors to act on these signals, further driving market movements. Lastly, the anticipation of central bank actions, particularly regarding interest rates and monetary policy, plays a significant role in shaping market sentiment. Media speculation and analyst forecasts about these actions can lead to preemptive moves by investors. For instance, if investors believe that the Federal Reserve is likely to cut rates, they might buy silver in anticipation of a weaker dollar, which typically benefits precious metals. In summary, understanding the interaction between media, market sentiment, and investor behavior is essential to gratifying how external perceptions and narratives can drive the price of silver. This influence is a crucial component of Macleod's broader analysis, which considers not only the economic and geopolitical factors, but also the psychological and communicative elements that can lead to rapid changes in market dynamics. As we proceed to the next step, we will explore how cumulative effects of these diverse factors integrate to potentially bring silver prices to the levels predicted.
I think you could also say the attack on Gaza was born out of a sense of insecurity, if you like, from this changing geopolitical situation. I think the way Israel is looking at its future is that it really needs America to get involved in protecting it. And this is why, in my view, it attacked the consulate, the Iranian consulate in Damascus. The hope was that this would draw America into a fight against Iran, which basically backs all the terrorist organizations from Hamas to Hezbollah and, there's sort of various other outfits, as well as the Houthis. So from Israel's point of view, it desperately needed America to effectively neutralize the threat from Iran. America realizes just how difficult this situation is and does not want to get involved. However, I think that this situation is going to deteriorate further. It is bound to, because Netanyahu is on a course from which he cannot turn back. He will think of something else. It probably won't be, if you like, as overtly aggressive as some sort of bombing run, bombing attack, missiles, whatever, against Iran. There will probably be something less overt, but I wouldn't rule out something, sort of, if you like, a bit headline catching, because Netanyahu is desperate to get America in to support Israel. There is tacit support in Israel, for Israel, from, for example, Britain. We sent our fighters over from Cyprus to help knock out the Iranian drones and missiles and so on and so forth, and along with the Jordanians, succeeded in downing quite a lot of them. This is something which I think we are going to see it escalate over time. And the concern for the West is that Iran controls the Straits of Hormuz. I think that as this escalates, we will find that not so much that Hormuz will be shut, but what Iran will do is it will allow shipping through on a very selective basis. Any oil which is going to Europe, I mean, incidentally, I think virtually nothing coming out of the Gulf goes to America, but oil coming out of the Gulf, going to Europe, going to possibly Japan as well, will be stopped. And that is going to drive up prices, oil prices, I think, quite easily to well over $100.
As we near the completion of our exploration into Aslidair Macleod's prediction of silver reaching $2,333 per ounce, it's crucial to consider the cumulative effects of various factors and how they integrate to influence silver prices. Each factor discussed previously, ranging from geopolitical tensions and economic policies to market triggers and media influence, does not operate in isolation. Instead, they interact in complex ways that can amplify the movements in silver prices. One of the key integrative aspects to understand is how economic policies influence geopolitical decisions, which in turn affect market sentiment and investor behavior. For example, expansive monetary policies implemented by major central banks can devalue currencies, leading to higher inflation. This situation often pushes countries to secure their economic interests through geopolitical maneuvers, such as securing resource-rich territories or forming strategic alliances that can impact global trade flows, including those of precious metals like silver. These geopolitical shifts can trigger significant media coverage and investor interest, leading to increased speculation in the silver market. The speculation, combined with actual changes in silver demand due to industrial and investment needs, can lead to volatile price movements. Moreover, as investors and financial analysts observe these price movements, their perceptions and predictions can further influence market sentiment, creating a feedback loop that can significantly amplify price changes. Another crucial aspect is the interconnection between physical silver demand and speculative trading. Industrial demand for silver, particularly from sectors like electronics and renewable energy, is influenced by global economic growth and technological advancements. As new uses for silver are developed and economies expand, the demand for silver naturally increases. However, speculative trading based on expectations of future demand can exaggerate price movements, especially when fueled by media reports and investor sentiment. Additionally, the role of derivatives markets in silver trading cannot be overlooked. Futures and options allow traders to speculate on the future price of silver without the need for physical delivery. The leverage available in these markets means that small movements in the price of physical silver can lead to large profits or losses, which attracts more speculators. This speculative interest, while providing liquidity to the market, can also lead to price overshooting and increased volatility. Macleod often discusses the importance of understanding the underlying fundamentals of the silver market, including supply constraints and production costs. As mining companies face challenges such as higher extraction costs and stricter environmental regulations, the supply side of the silver market becomes tighter, which can push prices up. However, these fundamentals are often interpreted through the lens of market sentiment and media narratives, which can distort the true supply-demand dynamics. Lastly, the role of large institutional investors and sovereign wealth funds in the silver market is a critical integrative factor. Their investment decisions are often based on a complex analysis of all the aforementioned factors. When these large players move into or out of silver positions, it can have a disproportionate impact on the market, leading to significant price swings. In summary, the potential for silver to reach the price of $2,333 per ounce, as predicted by Macleod, is based on a confluence of interrelated factors that span economic policies, geopolitical shifts, market psychology, and media influence. Understanding how these elements integrate and influence each other provides a comprehensive view of the silver market's dynamics. As we move to the final step in our exploration, we will summarize and consolidate our understanding of Macleod's prediction and reflect on the implications for investors and the global economy.
There are two big things in geopolitics. I'm discounting China, Taiwan, and so on. That at the moment is merely saber rattling rather than anything more serious. Obviously, in the headlines at the moment is the situation in Israel, the spat between Israel and Iran, Iran's response. What we see is the major players in this trying desperately not to get involved. It's quite clear from Iran's statements that it does not want to get involved in a full-scale war against Israel. America doesn't want to get involved in a full-scale war in the Middle East against Iran. It doesn't want to be drawn into the problem. I think Israel's problem really started when Mohammed bin Salman took over the, if you like, the executive responsibility, it's probably the best way to put it, of Saudi Arabia. Because really what happened was that he kicked out effectively the CIA's and other assets at the highest level in the royal family. And the point behind that is that he has then realigned Saudi Arabia more with Asian interests, if you like, rather than American interests. We see him working with Russia and Iran. Incidentally, looking at Asian interests, he has led the rehabilitation of Iran in Arab circles. So a truce has been called there. The Houthi war against the Saudis was effectively called off. Peace returned to the region as soon as the Americans were excluded. But put yourself in the position of Israel. Israel's major protector no longer has influence in the region, or at least its influence is very diminished. This must make Israel feel very insecure. And I think it was that led to a policy of trying to get America to reassert its presence in the region.
In this final step, we consolidate our understanding of the factors influencing silver's potential surge to $2,333 per ounce as predicted by Aslidair Macleod. By weaving together the threads of geopolitical tensions, economic policies, market dynamics, investor psychology, and media influence, we can appreciate the complex tapestry that may drive silver prices to unprecedented heights. Economic policies, expansive monetary policies across major economies, especially by central banks such as the Federal Reserve, have led to increased liquidity and potential inflationary pressures. These conditions typically boost the appeal of silver as a hedge against inflation. Geopolitical tensions, ongoing and emerging conflicts, particularly in regions critical for natural resources, heighten uncertainties in global markets, pushing investors towards safe haven assets like silver. Market dynamics and triggers, events like potential sovereign debt crises, technological breakthroughs in industries requiring silver, or significant shifts in the regulatory landscape can rapidly alter the supply-demand equation for silver, leading to sharp price movements. Media and market sentiment. The role of media in shaping investor perception and reaction to the aforementioned factors can accelerate and amplify market movements. Narratives that highlight silver's potential or risks can sway investor behavior significantly. Implications for investors and the global economy. Portfolio diversification. Investors may consider increasing their exposure to silver, viewing it as both a protective asset against inflation and a speculative opportunity, given its potential for significant price appreciation. Risk management. The volatility in silver markets calls for sophisticated risk management strategies. Investors should be prepared for potentially abrupt price swings influenced by macroeconomic changes and speculative trading. Industrial implications. For industries reliant on silver, such as renewable energy, electronics, and healthcare, rising silver prices could lead to increased production costs. Companies might need to rethink resource procurement strategies or pass on increased costs to consumers. Economic forecasting. Economists and policymakers must account for the impact of rising silver prices on inflation and the broader commodity markets. This could influence monetary policy decisions, particularly if silver's rise is indicative of broader inflationary pressures. Geopolitical strategy. Nations may alter their foreign and trade policies to secure access to silver resources, influencing global trade relations and economic alliances. Aslidair Macleod's prediction of silver reaching $2,333 per ounce is rooted in a deep analysis of interconnected market forces. For investors and market observers, understanding these dynamics is crucial, not just for capitalizing on potential opportunities, but also for navigating the risks inherent in a rapidly changing global economic landscape. As we conclude this exploration, it's clear that the potential surge in silver prices isn't just about market speculation. It's a reflection of broader economic, political, and social dynamics. Investors, policymakers, and businesses need to stay informed and agile, ready to adapt to the fast-evolving circumstances that influence the precious metals market. This detailed examination provides a framework not only for understanding Macleod's predictions, but also for strategic thinking in the face of global financial uncertainties.
I think that obviously President Biden, in his year of intended re-election as president, will be very, very keen to avoid. So that's the first problem. The second problem is Ukraine. We mustn't forget the Ukraine. The Ukrainians have definitely virtually lost the war against Russia. Recently, Russia has started to step up its campaign against Ukraine. It has bombed out a lot of the electricity stations, power generation, with very, very precise hypersonic missiles. The ground is now drying. So it is time for military mobilization, if you like, tanks and other equipment. That is now going to be mobilized. And I think you'll find that within the next month or so, Russia will escalate its attacks against Ukraine and effectively drive NATO out of Ukraine. Now, that is very, very important because this is the moment, I think, for Russia to really progress itself and also to progress its relationship with China economically. Once it feels that it has secured its position, its western boundary, this is really what it's all about as far as Russia is concerned. Once it's done that, then I think it's going to be turning more to, I suppose, trying to get rid of America and her allies out of Europe. I mean, this is really what what Putin wants to achieve. And the same is true in the Middle East. And he's got Mohammed bin Salman of Saudi Arabia on his side, by far the most powerful nation in the area. And we've got Egypt joining BRICS. So you can see that this sort of their geopolitical tectonic plates on the move here. This isn't just a spat in Gaza and an attempt to recover Crimea from the Russians, etc., etc. I mean, I think one of the things that shows that the CIA reckons that they have actually lost the situation in Ukraine was the departure of Victoria Nuland. I mean, she was the architect, the architect of the Colour Revolution in 2014. She has been pushing for Ukraine to be, if you like, very much in the NATO fold, in the Western fold, and Russia to be excluded. I think she has seen it as the pathway to destroying Russia. Now, that has obviously failed because she has left, and I believe that she has left because she has been effectively removed.